What's up, everybody? This is Investing Sensei here bringing another episode in the series of how many shares of a certain company do you need to make $1,000 a month, also $100 a month, and even $100 every single week. So in this episode, we will be doing Starbucks. So this is the list that you guys have provided to me in the comment section. I've been adding to it. So if there's one that you want me to do or cover that you don't see on the list, let me know in the comment section as well. Make sure that I haven't made a video, but if there's a company that I have already covered in the past and the price has changed dramatically, let me know in the comment section. I'll be happy to redo a video because that definitely does change the dividend yield. But we will be doing Starbucks. There's actually some great suggestions from the last video I made from some subscribers. One of those was to actually show the compounding of the dividend and how much principal you would actually need, because you would definitely need a lot less if you have a long time horizon for these companies. So I will be working on a format and trying to figure out what the best way to present that is in the coming weeks. So let's go ahead and jump to Starbucks, guys. So I do have Seeking Alpha pulled up. You'll see it's actually SBUX for Starbucks corporations. Currently priced trading about $87.11. If we go ahead and read a little bit about them, just a company profile, I'm pretty sure you guys are all pretty much familiar with Starbucks, but just in case you are not, Starbucks Corporation, together with its subsidiaries, operates as a roastery, marketer, and retailer of specialty coffee worldwide. The company operates through three segments: North America, International, and Channel Development. Its stores offer coffee and tea beverages, roasted cold beans and ground coffees, single-serve products, and ready-to-drink beverages, and various food products such as pastries, breakfast sandwiches, and lunch items. So definitely great company. It's got the name brand. Sector is in the consumer discretionary. Industry is restaurants. Employees 383,000, and then it was founded in 1971. If you want to visit their site, it's actually just starbucks.com. Definitely invested in this company. I'll show you guys a little bit in the dividend scorecard on why I'm invested with them. But if we look, we can look at the charts here. If we look at the year to date, they're actually down 25.34%. If we look at the 1 year, they're down 22.02%. And then on the 5 year, they're actually up 62.19%. 10 years, they are up 257.45%. And then the total years, they're up 18,000%, guys. Quite a huge gainage there if you had invested when they first became publicly traded. If you look at the 52-week range, you'll see that they're actually, the 52-week low is actually $68.39. So we're right in the middle. Highest they've traded in the 52 weeks has been $117.80. So definitely want to accumulate more shares of this company. If we look at the EPS, that's 2.87, PE 30.31, and then dividend rate is $2.12. Yield is 2.25%, and then market cap is $96.70 billion market cap for Starbucks. And if we look over here, guys, at the dividend scorecard, we can actually scroll down. You'll see that this is in the consumer discretionary again, and if we look at the dividend summary, dividend yield is 2.25%. Annual payout is $2.12. So for the full year, if you hold one share, you would get a total of $2.12. They definitely do quarterly payouts, so you would actually get 49 cents every single quarter, which should add up to $2.12. Payout ratio is 62.22%, quite on the higher end almost, but you'll see at the 5-year CAGR is 14.41%, which is a double-digit 5-year CAGR, which is very, very awesome for this company. And I'm definitely invested in this company. I'm hoping to accumulate more shares, and hopefully in the long term we continue to see this compounding of the dividend raises. Dividend growth is 11 years. It's actually, I believe, the 12th year now, because if I show you guys here, Starbucks actually recently raised its dividend by 8.2% to 53 cents per share, and we had to do absolutely nothing, guys. This is passive income at its best. So this should bring up the dividend yield, the annual payout. So definitely looking forward to it, and we will see how it all compounds in the coming years, guys. But definitely the suggestion from one of my subscribers to show the compounding, because you would actually require less principal if you are investing for the long term. Definitely got to figure out how to do that for the best format to present it, and I will start presenting that hopefully soon enough. But let's go ahead and find out how much you need of this company, assuming 49 cents instead of 53 cents, guys. But if I pull up the calculator, you'll see here that we can actually calculate everything. So first one we do want to calculate is $1,000 a month. So for us, in order to make that, is we want to make $1,000 a month. There's 12 months in a year, so total for the annual we need to make about $12,000. So you just divide the annual payout, $2.12, by that, and that will give you the total number of shares that you need to make that amount. So 5,660 shares that you would need. You can actually multiply this times the current share price, and this would actually give you the total number or I guess money invested that you need to have of this company. $493,000 invested in this company. Probably a lot less after the dividend raise, because you would actually get paid a lot more, so that would require a lot less shares. But of course, right now we're doing 49 cents. A quick way to calculate this is you could do 12,000 that you need to make a year, and then you could divide it by the dividend yield, so 0.0225%, which is roughly around $533,000. And then if we go ahead and show you guys, the other one is how to calculate or make $100 every single month. That one's a little bit more achievable because it does require a lot less capital. But you multiply that times 12 because there's 12 months in a year. So total for the year we need to make about 1,200. You could honestly divide the previous answer by 10 and that would give you the result. But if we look at the annual payout, we want to divide that by $2.12. So we need to have about 566 shares of Starbucks in order to achieve that. Then you're going to multiply this times the share price, which will give you the total sum invested. So $49,000 is what you need to have roughly. Again, quick way to calculate this is 1,200 divided by the dividend yield, and you'll get about $53,000. Rough estimate there. Let's do the last one, which is $100 every single week. That would be pretty awesome. There's actually 52 weeks in a year, so you would actually need to own about $5,200 is what you need to make in order to achieve that. So you're going to divide that by the $2.12, and that gives you about 2,452 shares that you would need to own to achieve that. And then you can just multiply it times the share price, which is $82.11, and that's about $213,000 that you'd have to have invested. And again, quick way to calculate this, 5,200 divided by the dividend yield, and gives you about $231,000. And yeah, guys, takes quite a bit of capital, but again, if you invest for the long term, this would actually require a lot less, especially how I showed you guys the dividend raises. This is amazing. 5-year CAGR 14%, which is very, very awesome. I definitely want to show you guys the principle in the coming videos, because I think it'll be fun, because you wouldn't need this much capital if you are investing for quite a long time, especially 5, 10, 15 years, 20 years. Would require a lot less principal there. So very, very awesome. But let's go ahead and jump over here to the dividend yield, which I can show you guys. So if you look here, this is the Starbucks, this is the dividend yield 2.25. You'll see it'll fluctuate, and that's depending on the actual price of the stock, because if the price of the stock actually goes down, the dividend yield goes up. If the price of the stock goes up, then the dividend yield goes down. But you'll see here in 2021 it actually was around 1.5, and then recently in the 2022 it's actually been going down, the stock price, so the yield has actually been going up, and this is a great dividend starting yield for Starbucks, around 2.60%. So around June, July, it's actually been going down, and I'm pretty sure that's because the price of the Starbucks has been going up. But definitely great entry point, I think. And so far I'm going to try to accumulate a lot more shares on Starbucks. Let me know in the comment section if you own Starbucks. Are you invested in for the long term? And what do you think of the dividend raise they recently gave us? But again, don't forget to subscribe with the bell notification if you have not done so. We're trying to get to 8,000 subscribers, so definitely help me out. And as well, drop a big thumbs up on the video and let me know any new stocks you want me to do or cover in the comment section. I'll be happy to add them to the list, and I will catch you guys next video. Take care, stay safe out there. Bye guys.